Did you guys do those 5 questions? Okay, good. So, all right. So before I used to say, if you got 5 out of 5, we get to finish early. But let's raise the stakes. If you get 5 out of 5, then I will give you, not all, but I'll give you some answers for the assignment number 2. If you don't get 5 for 5, we don't go over assignment number 2. I will not prep you. Is that a deal? Are you willing to shake hands on it? As I'm sticking out my hand, pointing to the monitor, waiting for a virtual handshake back. Uh, all right. I think you will get 5 out of 5. Let's hope so. If not, then we know who to blame. It's Brittany's fault. And Terry. They like to always divide the classes. Team Brittany and Team Terry. Okay, welcome. Hello. Yeah. You're okay. All right. So last class, we were dealing with family situations to do with support payments, when a change in marital status, adoption, child care, what happens to your tax returns or the consequences with credits when you make those changes. Any questions with chapter 12? Oh, and is Boommeet? Where's Boommeet? Is Boommeet here? Boommeet, I saw your email. I just didn't have a chance to reply. I'll reply later tonight, okay? Actually, yeah, okay, I'll reply. Don't worry. Yeah. So everyone okay with chapter 12? So far, so good. No questions for chapter 12. Everyone was okay. All right. So again, we have one person answering for everybody. Okay, well that's fine. All right. So everyone's marks depends on Jenny's. So if Jenny gets 100% assignment number 2, you all get. If she doesn't, you all fail too, right? Okay. What is this? Oh, okay. Oh yeah, assignment number 2. Yeah, okay, that's right. It's going to be discussed on Saturday, this coming Saturday. Like I said, we're going to try to spend some time to just go over, read the problem together, and like we did last time. Okay, so I don't want to say this, in a to. I don't want to say something. I don't know what's the word. Maybe not in a negative way, but if you haven't been listening now, please make sure you listen when I go over assignment number 2. But then I might say, well, then don't listen from me till now, till whenever, right? Till 8:30 or something, and then listen to me. Of course not. Okay, today our agenda. So we're dealing with students, how we handle student income, the registered education savings plan, loans, tuition tax credit, education textbook amounts you can claim or not claim. A Schedule 11, that's to do with when you're claiming tuition, transferring of your tuition, and students if they're moving, and the adult basic education assistance. So, if you've read this chapter, you'll know things like scholarships, fellowships, whatever things that students can get and how they're reported, how the RESP, Registered Education Saving Plan, works, and about also claiming student loan interest, how to do the Schedule 11, and if you are going to transfer your tuition credits, how you do that, and also this Canada Training Credit that's for adults that they can claim this credit to apply to their education if they go to school. Okay, all right, guys, here it is. Number 1. Linda is 71 years old and widowed. Her only sources of income are CPP and OAS. Can Linda claim the pension income amount on her tax return? Let's get this annotation thing going. Yes or no? And either put on the screen or type it in the chat. Yes or no? We got 1 no, 2 no's. Three no's, 4 no's, all no's. All right. What does your host say? Oh, does your host say no? Or does your host say yes? Well, the answer is no. Excellent. Okay. Does everybody remember why it's no? Or you? So that pension income amount, the key word is, well, is pension income. And like you could say, well, Canada Pension Plan and OAS are our income, but it's government. It's from the government. Pension income has to be like from a company, an employer that they worked for. So if Linda had this plus, say, pension from her job, was she able to claim the pension income amount? Yes or no? Yes, as long as there is some kind of pension income, whether you're collecting OAS or CPP, as long as there's some kind of pension income from an employer, a former employer, then you can claim the credit. If not, if you're just collecting CPP and OAS, no credit. Okay, 1 for 1. So far, you're on a roll. Number 2, Leonard is 67 years old. He received $10,000 in registered pension plan annuity payments reported in box 16 of a T4A and $5,000 in RCA income reported in box 17 of a T4A or RCA. Leonard's spouse is 64 years old and does not receive any pensions. Assuming they elect to split income, what is the maximum amount Leonard could claim on line 11,600? A 0, B 2,500, C 5,000, or D 7,500. Let's get the annotation on and go ahead. So, you guys remember what the RCA is? Retirement compensation arrangements. C. I would love to hear the explanation too, Karina, because this one is a little bit of a tricky one. I don't like this question because it's not, I don't know. I don't like it. Okay, does everyone goes with C? Okay. All right. So um, so he received 10,000 in his annuity and 5,000, and so first of all, why guys he said C 5,000? Would anyone want like to? Okay. So we know that if you split, you have up to 50% to split the pension income. Okay. Now So remember, okay, let's do it this way. Who said D? I saw a couple D's there all of a sudden. Who put D? I want to hear from you. Why D? Why D, Jenny? D for Demosthenes, my last name? Okay. All right. So the answer is D. But I was waiting for Jenny to give me the answer. Her reason why, because Jenny seems like you're one of the only ones who answered D. So remember, it all depends on you for 100% assignment, since you answer for everyone. Why is it D? No, smiley face doesn't count, Jenny. That's not the reason. Your classmates want to know, why is it D? Because they all said C. So why is it, even Boomeat said C. Why is it D, Jenny? Or you just thought, just took a chance? Jenny's not going to answer me, is she? No comment, Jenny? Okay. All right. So if you remember back in chapter 11, to do with pension income splitting, mark this chart, guys. Okay, what makes you eligible for income splitting? For the depending on what slips, you have to be 65 or older. Okay, now who's doing the pension income splitting? Right, it would be Leonard. Okay, because his spouse has no income, so he's over 65 years old. So he's got his RPP. So where is the RPP? T4A. So box 16. Where is it? Okay, there it is. Registered pension plan. You see, guys, here, RPP. Okay, so he gets annuity payments. That's what it said right here. So is he eligible to split? Yes. So you guys got that right. Some of you put down the 10,000. Okay. But what about the T4RCA? Here it is. Eligible to split, right? Third column. If you're 65 or older, yes. So it doesn't matter that his spouse is 64 years. It's the one who's splitting the pension. As long as a person who is going to split the pension, it's their money that's being split. They have to be 65 or older. So 10,000 plus 5,000 is 50,000, and if you split it just to the maximum, because it doesn't say percentage, so usually just would split it 50-50, the answer is 7,500. So does everybody understand now why it's D? Jenny, was that the same answer you had? Jenny, why are you so quiet? I'm going to take marks off you. So it's D. Okay. All right. That was a little bit of a tough one. So, okay. So, because you're gonna have, what is it? It's you have Thursday off, Saturday your assignment's due, and then basically your final exam is due less than a week later, before next Thursday's class. Okay, not obvious. So, and I know some of you might be stressing out and freaking and needing to catch up and they're behind. But like I said, if you have your inkling, you have whatever you need. But if a question like this comes up and you're like, oh, I don't know, what again is an RCA, right? Just search it, type it in, like you see there, RCA, right? And then you got the list of things to look at, or RCA, splitting or something like that. So you'll be able, the searching will help you If you're stuck, type in those keywords and it'll take you to where you are. I can't remember everything. Tarani can't remember everything. Well, I can remember most things, but most things that are important, actually. Not saying this is not important, but you know what I mean, right? Like, it's just some things you're not going to always remember. So, you know, that search bar is very helpful, okay? And it's helped me on exams for sure, because I can't always remember, where did I read that, or I'm not sure. And sometimes, oh, okay, well, I should, maybe I don't, if I tell you now, you might forget. So I don't know if I should even tell you now. Maybe I should tell you close, when the last class before you have your exam. Well, I might say it again. Some of the questions, it might be written differently, but it are change of names, but they're exactly like some of those exercise questions in the textbook. You know, almost word for word. Some of those exercise questions, or those illustrations. Those, like when I say, "Oh, look at illustration 11-1 or 10-4, whatever it is." So not all of them, but some of them are almost verbatim, word for word. They might have just changed the name of the person. So kind of also to test that you're reading your textbook. Okay, number 3. Lou and Lee separate on June 15, 2024. As part of their written separation agreement, Lou was to pay Lee $200 a month in child support and $100 a month in spousal support monthly beginning August 1st, 2024. Lou paid the first 4 payments in full and on time, but was unable to pay the December payment. How much can Lou claim on line 2200 of their 2024 tax return? So go ahead and either circle or underline or write it down. So line 22,000, that's the how much you deduct in how much you deduct. Well, 2199 is your total support payments, and 22,000 is how much you can deduct. So what do we got here? B 200 200. All B's. No one wants to go outside the box. No one wants to think outside the box. Or if you like Taco Bell, outside the bun. Okay, the answer is B. Well done. Good job, guys. It's 200. And why is it 200? Payments were started and made in August 1st. So how many months is that? How do you get 200, guys? So there's 5 months of child support payments, right, from August to December, for $200 each. So that's 1,000. But he only made, and 100 for spousal. He only made 4. So that's 1,200. But remember, child always gets deducted first. So because he missed the last payment, he can only claim 2,000 as a deduction. Exactly. Very good. Okay. Number 4. Justin and Haley separated in July. Justin was not working when they were together and did not earn any income prior to separation. By a written agreement, Haley paid monthly spousal support to Justin for a total of $6,000 last year. Oh, that's nice. Haley paid the spousal support. Okay, is Haley allowed to claim both the spousal amount and a deduction for spousal support payments made? Annotations on. Go ahead, circle, or put in the slide. Terry with an emphatic no. Jenny with oh no, Jenny, nice to welcome back. You disappeared for the last 10 minutes. So you had no comments and now you're back with a bang. Oh, interesting. Oh, the pleasures of being behind a monitor. No, no, no. Okay, the answer is no. Why is it no, guys? How come it's no? That's right. You can only claim one. Very good. Very good. All right. Okay, let's go out with a bang here. Let's try to get 4 out of 5. All right, number 5, last one. Tim and Jill are married and have 3 children. Brad, born February 22nd, 2011. Randy, born on May 12th, 2014. And Mark, born on August 15th, 2017. During the year, they paid a total of $10,000 to Borland Daycare in respect of Randy and Mark. Tim's net income was $40,000, all from employment. Jill's net income was $21,000, all from employment. Tim nor Jill were in school nor infirm. Who is eligible to claim the child care expense? Okay, go ahead. Is it Tim, Jill, both, or neither? We got a C, we got a B. So Jenny says C. Jenny, you care to elaborate? For those of you said B. We got C. So Terry, are you feeling bad for Jenny and you want to join her? Who else wants to go with C? She could be right. And she was wrong the last one, but she could be right in this one. Anybody want to change their mind? C? Okay. So for those of you who said B, I was going to ask you. Okay, Genevieve, you answered. For those of you who said C, why C? So right from the very beginning, child care expenses eligible claimants in Chapter 12. Not all taxpayers are eligible to deduct child care expenses. In cases where there is more than one supporting person, the expenses must usually be claimed by the person with the lower net income. It does have some exceptions where a higher one can, but the reason is that the lower income is attending school or incapable because of a child. I think we even went over this last class. We went because I have it highlighted. Usually the things I've highlighted are the things I stressed in class. So the answer is it is Jill. It's B. It's the one with the lower net income is the one to claim. Okay? Everyone understand that now? Everyone good? For those of you who got C, who choose C? Unless there was any other reason, like I mentioned, due to physical infirmity or prison or going to school, incapable, it's the lower income that claims. All right, so it's Jill. Her net income was 21,000. So Terry, she still would have been above the basic personal amount. So that means his childcare expense would have pretty much eliminated any taxable income, right? So that's why. Well, Jenny, that's good. You can review, or come see me, and then we'll review together. Then I can really test your knowledge. Okay, all right. Okay, good, guys. Well, that was good. You got 4 out of 5. I mean, pretty much, you know, that number 2 was pretty tricky, but you did very well. So let's get on to excuse me, chapter 13. All right. So, student income. So, if you students, you know, aside from employment income, they can get something specific. All right. If they're taxable, they report on line 130100 of the tax return. Um, and there are things like scholarships, fellowships, bursaries, and achievement prizes. You get a T4A slip, and it'll show on box 105 what it is. As your textbook mentions, these are taxable unless the scholarships and bursaries are towards elementary or secondary school education, or if the qualifying student is enrolled in a full-time qualifying educational program in the current year, prior year, or the following year. Your textbook says, like, defines what a qualifying education program is. And for the most part, it's pretty much, you know, any university or college or you know, educational institution where it lasts. Well, we're going to get into that anyways. And if you're I think this is a if a qualifying student is enrolled in a part-time, is it PS or should it be PG? Like, I think it's supposed to be project. I think it's a project grant, not PS. Could be a typo. $500 plus tuition, fees, and the cost of program-related materials is exempt. And then if you're not a qualifying student, only the first $500 is exempt. So pretty much, for the most part, students are usually, when they get scholarships and stuff like that, they're going full-time to a university and with at least minimum 1 month of full-time study. So those are completely 100% non-taxable. You still got to report it. But if you're a part-time qualifying student, you can reduce your taxable scholarship by $500. There's a $500 basic exemption plus the tuition fees, plus the cost of program-related materials, and of course, if you're disabled, that exemption is different, and we're going and. Yeah, there's an exception for disabled students, and they'll get a special T 202 slip for that, or T, what is it called? I'm trying to see in your schedule here, or in your textbook here. It says somewhere. Anyways, it's I think it's supposed to be PG program, project grant program. I don't know what this PS, I can't find this PS. Might be a typo. Or post-secondary. That's what it is. Post-secondary? Part-time. It's post-secondary. Me. Post-secondary. Enrolled in a program. SPS. It means post-secondary. Anyways, okay. Sorry. Yeah, I think it's in a part-time post-secondary program. That's what it is. Yeah. So if you're part-time and you get a scholarship for part-time, you can get you get up to you get a $500 exemption plus the tuition fees. It reduces your tax scholarship by $500 plus the tuition fees and the cost of the materials. So everyone okay with that? Your textbook goes into illustration, example of exempt scholarships, talks about what the definition of a qualifying student is in chapter 13, what the definition of a qualifying educational program, special education program. That's about it. Everyone okay with that? About this bursaries thing and scholarships and all that stuff? Everyone okay? It's pretty straightforward. It's in your textbook. It's right from the beginning, student income. So just make sure you read that. Okay. All right. Okay. Registered Education Savings Program. Everyone okay? Everyone all right? Can I go on? Or any questions? All right. Okay. So registered education, basically the main thing is the student will get a T4A, and once they get, you'll find out if they've been full-time student or not. If they're full-time, then it's not taxable. If they're part-time, then they get a $500 basic exemption plus the fees to claim. But I think we also talk about the fees too later on. So there's a minimum of how much the fee has got to be too. I think if oh no, if you're well, yeah, I guess we'll get to that. Okay, so the RESP is it's basically a registry, well, as the textbook says, and then it's a contract between an individual who is a subscriber and a person or organization who is the promoter. Okay. Subscriber will then name a beneficiary, which is the student. The subscriber agrees to make a contribution. The promoter agrees to make educational assistance payments. Okay. So, I'll make sure I don't jump the gun here. RESPs are not unlike RRSPs, they are not deductible. Okay, and just so basically, this is an example to understand between subscriber, promoter, and the beneficiary. So 99.999%, the subscriber is the parent. They set up a registered education savings plan with the promoter, which is the bank, and the beneficiary is the student or future student that will get this money. Okay. So as your textbook says, the subscriber names who the beneficiary is. They make a contract with the promoter of the bank to manage the amounts that are being paid to accumulate this savings plan, and then they're paid, and they're it's to help with the beneficiaries' post-secondary education and to use it towards that. Okay. So as it says here, they are set up by the subscriber to save money for beneficiaries' post-secondary education. They are not tax deductible for the subscriber, so the parent who's setting this up and putting money in cannot use it as a deduction like RRSPs. There's also grants and bonds. Your textbook does deal with if you're using those kind of like Canada Learning Bond. They have, again, we don't really, I've never dealt with Canada Learning Bond. I've never even seen it in my life. Tarani, have you seen Canada Learning Bond or heard about that? Or is that, am I familiar with RESPs, or do some of you do this for your children, or have done it, or have used it? Yes? Okay. Yeah. What about the Canada Bond? Have any of you used a Canada Bond? I have one for my kid. Awesome. That's nice. Yeah. So there's yeah, so and then yeah, and you cannot exceed 50,000, so that's the max of contributions. And then they are no longer allowed after the year of the 31st anniversary of the plan opening. Contributions are no longer allowed. So basically, your I guess if this is obviously for your child has you have 30 years to keep contributing and to fill up the maximum in case your child hasn't gone to school for, say they decide to go very late in to post-secondary. But basically, yeah, you're allowed to contribute right up to the 31st year of the anniversary. And the plan must be completed at the end of the year of the 35th anniversary. Very interesting, eh? So you have that many years. So it's called like the family plan that's in your textbook. Okay. Generally, contributions to family plans can be made for beneficiaries who are under 31 years of age at the time of the contribution. No contribution can be made at the end of the year that includes the 31st anniversary of the opening of the plan, and the plan has to be completed by the year that includes the 35th anniversary of the opening of the plan. Okay. But you can also name more than one beneficiary, so that's one of the advantages of why you can have it for that many years, in case maybe one you have two children and one doesn't use it, then you can have, or it's not, then it goes to the other child, that depending how you set up the plan, but you can have more than one beneficiary. So registered there is no annual contribution limit, but the lifetime limit on the amounts that can be contributed to all RESPs for the same beneficiary is 50,000. So I guess it would be for each beneficiary then, right? It's for one. So if you have more than one beneficiary, it's still 50,000, Boommeat? Is that what you're saying? 50 each. Yeah, that's right. Yeah. So so if you have more than one, so it's 50,000 for each beneficiary. So if you have more than one, then it's it's 100,000 total, right? Got that, Genevieve? Awesome. Okay. So in terms of income in this plan, it's sheltered from tax until the money is withdrawn from the plan. So just like similar to an RSP, until you withdraw the money, there's no tax on it. When you're enrolled in a qualifying program, the beneficiary receives payments consisting of a refund of the original contributions, which is non-taxable, and the income earned by the funds within the plan, which are taxable. Okay, the taxable portion is reported in box 42 of a T4A slip, and box 42 is including the student's income on line 13,000. So if say 50,000 was put in, and by the time that the beneficiary withdraws the money, the 50,000 is not taxable. But if in the amount of time that money was sitting there, say it made 10,000 of investment income, then the 10,000 part of it is taxable, and so the beneficiary would receive the T4A slip that would show the taxable amount as income. That in this case, like for example, 10,000. Okay. All right, so your textbook under RESP payments gives you a little bit more detail about this and some of the things I just said, and mentions about the taxable income report online. And this is the promoter, which would be the bank, determines the portions and reports of taxable income on box 42 of a T4, and the recipient, which is the beneficiary, the student, includes this taxable amount as line 13,000. Okay, pretty straightforward. So there's example. The parent subscriber, promotes the bank. We know the student's a beneficiary. Okay, once they're enrolled in the qualifying bank program, the amount of original contribution is not taxable, but any income earned within the plan is taxable. I like these charts. We never had these last year, so it's good that they incorporated some visual arts here to make it to make it more easy to understand. Okay, now what if you don't go to school though? What if Brittany, your child, who's the beneficiary, does not want to go to school? Well, if they don't enroll in a post-secondary education, a tax-free refund of contributions along with any of the income, the taxable earnings, are paid to the subscriber. So it's repaid back to the subscriber, which is the parent, and the accumulated income payment, so that amount that's taxable, goes on box 40 of a T4A slip and report line 13,000. So for when it was the beneficiary, the student, that income was box 42 of a T4A. But if it's a subscriber, if their child does not decide not to enroll in school, then the money comes back to them, but only the taxable earnings part of it, the income that's generated, is reported as line 13,000 of the subscriber's income. Okay. Now, as it says here, there's also a special 20% on the accumulated income payment, unless there's room to transfer it to an RSP. So if you don't transfer it, then there's an extra 20% tax taken off on that. So as it says in your textbook, if a beneficiary, like the child, decides not to pursue post-secondary education, both the contributions and the income may be returned to the subscriber, the parent. The contributions are returned tax-free, but regular tax is payable on the income. And in addition, a special 20% tax is levied unless the subscriber has sufficient deduction room to transfer to the RSP. So you still have to claim any of the income that you generate, but you won't have to pay an extra 20% if you can, if you have room to put that in an RSP, that amount. Okay. So here's an example, another chart. So you have, so two things. If it goes to the student, the beneficiary, then obviously the refunds are the amount that's been contributed is non-taxable, just what's been earned in that amount of time. But if it doesn't, it goes back to the subscriber, the parent. Then again, the contributions, let's just say it was the max 50,000, are not taxable, but the income earned is, as well as an additional 20% if there's not enough room to put the money in, to put the money into an RSP. Okay. So far, so good, everyone? Everyone okay with this? All right, student loan interest. Does anybody still have any outstanding student loans to pay? I did at one time. So students can make a claim as a non-refundable tax credit for the interest paid on loans, okay? Under the Canada Student Loans Act, the Canada Student Financial Assistance Act, or the Apprentice Loan Act, or some similar provincial law. And it must be paid on the original agreement. An official receipt is required. Only the interest can be claimed. It goes on line 31900 of the Part B of Step 5 for non-refundable tax credit. And it can be claimed in the year it was paid. I know, especially if you're not going to school. If you're not going to school, or you don't have any children that are going to school, this can be a little bit kind of. Can you see I've been a little bit yawning so far? So it can be claimed in the year that interest was paid, or in any of the 5 subsequent years. So almost like donations. If you don't claim it, you have up to 5 years to claim the interest. Okay, good. All right. I'm glad you haven't dozed off on me yet. I usually don't put people to sleep. Well, depending if they want to be put to sleep, I can put them to sleep. And again, only the student can claim the credit. So as it says here in your textbook, only the student who owed the interest can make the claim, even if someone else made the payment. An example, like your parent or spouse or common law partner. So I've had sometimes parents says, well, I'm still paying for my student. I'm helping them pay the loan and their loan interest payments. Can I claim it, or can they transfer it to me? I said, no, it's even if you make the interest payments for them, it's your child is the only one who can claim them as a credit. Okay. Now, don't get this confused with a student line of credit. Like, if you get a student line of credit with the bank, instead of getting an actual student loan, a Canada student loan, student line of credit does not qualify for this, because some banks offer a deal to get to open up a student line of credit with maybe a special low interest rate compared to like a regular line of credit, but the interest you make on that does not count as a non-refundable tax credit. Only if it's an actual official Canada student loan by means of the Canada Student Loans Act, or the Financial Act, or Apprentice Act, or through a provincial law, like a BC student loan. Take a break? What the? No, it's still early. Let's chug through this thing. Okay. Claiming what? Poll question already? Everybody in their polls. Okay. All right. Let's try to bang this off and make sure we do have enough time to go over the assignment. And who knows? Maybe we'll be done even earlier than 9 o'clock. We'll see how on the ball you are. But I don't hear much from Jenny anymore, so I'm a little bit disappointed. So if Jenny doesn't participate, then we don't finish early, right, Jenny? Okay, student loan interest can be claimed A, for the year it was paid. So let's refresh your memory. Let's see if you're awake, Genevieve. For the year is paid, for the year interest is paid, and any of the next 3 years. C, for the year interest is paid, and for any of the next 5 years, or when the interest is paid, and any for the next 10 years. So go ahead. You could circle or put it in a thing. We got already a few C's. So these kind of questions also will be like on your exam, where it's like the exact same writing, and then there's just one number or one word changed, and it can make a difference. So I gave you guys a little bit of a hint. If all else fails, remember the donation rule. It's not exactly the same, but it's that 5-year thing, right? Like donations, you have up to 5 years to claim donations. Well, it's the same thing with the student loan interest. You have up to 5 years to pay to claim if you didn't claim it, and so if you had interest in 2021 and you haven't claimed it, well, you have until 2026 return to claim it. So excellent, C. So I'm glad you guys are paying attention. That makes me feel so good. I'll sleep good tonight. Okay, excellent. So it is C. So this is what the tuition tax credit you do it on. It's called a Schedule 11. I believe it's in your fillables. Let me see here. I think it is. Yeah, the Schedule 11 is called a usually student loan has no interest. Am I right? If you don't pay it back in time. I don't know what the grace period is. Maybe some of you might know. I think it's what? Is it 1 year after you graduate? Do you get 1 year grace, or is it? What did they? It used to be 1 year. I think you're able to be interest free for 1 year, and then no. Like interest free for like 1 year, and then they would start charging the interest rate. Just let me check. That's a good question. Or is it 6 months? Oh, 6 months now. 6 months after graduation. Okay, that's the grace period. I thought it was 1 year. Maybe it was, or maybe it was always 6 months. It's interest free until you're until you graduate. Then whatever the amount of student loan you have, then after 6 months, then that's when interest is applied on that loan. So like if you got 2001 year, 2000, like say you went through 5 years of post-secondary, and you got say $2,000 loan every year, so for a total of $10,000. Well, you're not charging any interest in those 5 years because you're still going to school, right? You're still doing your program. But at the end of your graduation, after if you haven't made any payments back, after you get interest free for I think 6 months, because it's on the website too, the National Government of Canada National Student Loan Service Center. It does explain to it. You do not have to make payments while your loan is in the 6-month non-repayment period. However, interest may begin to accrue on the provincial portion of your loan. So BC, no, there is no interest either. So or accrued interest. Ontario does have interest accrued. So it is 6 months. So during the 6-month non-repayment period, you can start making payments right away to make your loan off faster. Yeah, so I'll just send you guys this link for those who might be interested. It's right here. So yeah, you have 6 months after you graduate, interest free before they start charging interest. And I don't even know. I don't know what the percentage is. I don't know. Maybe on the website it might show it. But yeah. So there it is. A Schedule 11. That's how you would calculate the tuition credit. Okay, that's the form. You're welcome, Jenny. Um, just make sure you bring me a nice big gift when you come see me. Thank you, Tarani. Well, yeah. Once your grace period ends, you got to start paying interest. Interest accumulates, right? You have to pay the interest, and then when you pay interest, and usually it's set up where it's paid automatically, or you take so much out of your usually maybe a minimum amount that's taken out of your bank account. Then you should be able to get a statement at the end of the year, and you can claim how much. I think you're able to log into your into that website. I think you can log in, and then it'll show you what you paid for the year, and you can claim that amount as a deduction, right, or as a non-refundable tax credit, the interest that you paid. Okay, so the tuition tax credit, and it includes various other eligible fees, and those fees are included on a T2202, which is what you get from the educational institute that you go to. Okay, so usually any university or college or recognized institution and educational institute in Canada usually will get you a T22 slip, but sometimes depending where you go and what the course is, you might just get an official receipt, and they determine the amount that's eligible to claim as tuition. But usually, for the most part, you get an official T2202 that's done by the institution. Licensing examination fees are eligible if you're required to obtain a professional status or to practice a profession or trade in Canada. So, excuse me. So your textbook, eligible tuition fees are claimed as a non-refundable tax credit. They do not include student association fees or the cost of books or board and lodging. Or the cost of, so they do not include association fees, board and lodging, or the cost of books unless including the cost of a correspondence course given by an eligible educational institute in Canada. So sometimes you take a program and they're, I guess it's the material you have to pay them at, like, the cost of the books for the course, and it's a one cost, like one price for the material. And so if you do get that if you're not that kind of course or program, then you're allowed to claim the cost of that. But for the most part, though, and it wasn't like that many years ago. I don't think I was able to, but I remember people told me at one time you were able to claim the cost of your books because books were expensive. Right now, that's why. So people start, like how every semester, okay, whatever course you take, oh, you got this is you need Finance 1, 2002 edition or whatever it was, and then you'd go to the bookstore and you either had to buy it brand new or try to find used copies, or if you knew a friend or who took the class, or you posted on on Facebook or something, like anyone or through the university maybe website, or anybody got any used textbooks. And so I had to go down the used textbook route because buying textbooks are very expensive. So unfortunately, unless it's specifically there's some cost of book that's included in the course, and it's one price kind of for everyone, then you cannot claim the cost of books. And as also your textbook says, sometimes there's these some universities, institutions require you to purchase a discounted transit pass called a UPass. I don't know about that if we have that here in BC, but that's not eligible either as a tuition fee. Okay, and your textbook does have a list of eligible tuition fees and what they are. Okay, and they're claimed in the year incurred as opposed to when they're paid. So, so if you pay for the fee, so if you pay to go to school, so if you paid this year to go to school next year, you're not eligible to claim that in your 2025 return. It would be on your 2020. If you paid it now, but you're going to school next year, you wouldn't claim it for your 2025 return. You would claim it for your 2026 return. So it's not when you paid. It's not for when you paid it. It's when it's incurred. It's a claim in the year that you incur when you're attending the school. Because what if you pay to go to university next year, and then what happens? Say next year you decide not to go, right? Then would be, why would you then? You'd be defrauding the government by claiming a tax credit for it if you never went to the school. So it kicks in once you start attending the program. And also, I saw it somewhere. Oh yeah, okay, yeah, it does. They can be claimed for post-secondary courses taken by university, college, or other educational student in Canada to help improve the taxpayer's skills. Any courses taken at an institution in Canada certified by Employment and Social Development Canada, or at a post-secondary educational institution in Canada, but not at a post-secondary school level. So that you can claim that. You can claim the courses taken if it's certified by the Employment and Social Development Canada, if it's not an actual university or college, but it's been certified from this organization, or at a post-secondary educational institution in Canada, but not at a post-secondary school level. And you must be at least 16 years old on December 31st of the tax year. Okay, so I hope this course improves your occupational skills. I hope so. Or maybe it's a third point. Maybe it should be part of the social development. I don't know. Maybe this might help your social development, guys. Because you guys got to get involved. So, yeah, that exactly. So your textbook talks about the tuition fees may be claimed for, basically what I just said, and also courses from other certified institution. It's interesting. Is it on here? Institutions in Canada. Where am I here? Question. One thing I need to stress, that second bullet point, Boomy, thanks for pointing that out. So your textbook says its judgment must be used to decide whether the course develops or improves an occupational skill. Because if the course is not leading to some kind of degree that you're going to attain, or a master's or something, or a doctorate or something, right? Then you got to be sure that that whatever you're taking is for the purpose of improving, because it says here in your textbook, for courses taken at other certified institutions and for courses other than those designed for university credit taken at post-secondary institutions, however, judgment must be used to decide whether the course develops or improves an occupational skill. The rule is that a course must be directly related to the student's current or intended occupation to be eligible for tuition credit. Otherwise, the purpose of enrollment is not regarded as being to acquire occupational skills, instead of just for, personal interest or self-development, or, and it uses an example. And I think this might be in a theory exam question, because I remember seeing something like, what does not qualify for a course, and I think this might have been used, and it gives you driving lessons do not qualify unless a taxpayer is taking them to seek employment as a driver. Same thing with flying schools, unless you're, if you're just taking, flying lessons just because you want to learn how to fly, they're only eligible if you plan to become a commercial pilot or professional instructor. So that's a good one, a good paragraph to highlight. Courses from other certifications, like but no fear, no need to worry about this course. This course is intended for improving your occupational skills. So you will get a receipt where you can at the end of the year you'll get an official tax receipt, so you can claim it on your income tax as a tuition credit for the cost of this course, guys. All right. Okay, and then there's another one here. Oh, so that's what it looks like, the T2202. Have any of you seen this before, or from your child who's gone to university, or yourself going to school? Oh no, Jenny, they asked for the SIN, so I can go in and look into your personal information and find everything I need to know about you and all you guys, so that if anything happens, you'll never escape me for the rest of your life. I'll be on you like a leech because I have your social insurance number. I'm just kidding. I don't. Yeah, for 2202. Does anybody have seen this before, or received one, or? Okay, good. Yeah. So this is what it would look like if you went to a designated educational institute. They would fill this out for you. They put all the information in those boxes, and then also number of months, part-time or full-time, and how much the fee was. So you would get something like that. Okay. The post-secondary education institution, or whichever, they're obliged to do this. They have to do it. It's not you that fills it out. So if you haven't received one and you've gone to post-secondary, or are going as well, then you should, but sometimes you have to bug them to get one if they don't give it on time for income tax purposes. Now, on the back of it is, and I think we're going to discuss this more. Well, it's in your textbook. The previous one's in your textbook. Okay, this one's in your textbook under tuition certificate T2202, and then the back of this. And illustration 13-4 is an example of a Schedule 11. Okay. Tarani, do you want to send that to everyone, Tarani? Tarani, you want to send that link to everyone? Tarani, just to go back about I guess they changed it then. I guess you don't get charged interest anymore for student loans. I guess they stopped that after 2021. Only if you were, so it tells you, once you've that link that Tarani sent, once you've finished your studies, you enter the repayment after a 6-month non-repayment. So I guess no interest is charged on Canada student loans unless you had interest occurred before 2021 of April 1st. So So, way to go. So no, I guess they maybe, oh, maybe because during COVID and stuff, I think that was maybe one of the things they changed the budget to help people, help students, and people that, because of, now that's now it refreshes my memory. That's right. There is no more student interest, and they haven't re-implemented it. So if you've been going to university past April 1st, 2021, and accumulate any student loans, there's no interest. Just have to repay them after 6 months. After 6 months, then you have to enter into a repayment method. Yeah. And then it gives you that same link I gave you, the NSLCSC. Thank you, Tarani. Thanks for clarifying for that. I guess because we have this claiming interest because 2021 is still pretty recent, and some people have graduated university, a few years ago and might have had interest, added to their loan. But since 2021, no more interest, or after April 1st. Okay, good job. So on the back of the T2202 is this. If you want to transfer the tuition, you fill out that information that's highlighted in yellow, and usually for the most part, it's a child transferring any unused amount that they can't use, because a lot of children that go to university don't have any income. So if they don't transfer it, it just adds it just accumulates to the next year until they have employment income, because again, it's a non-refundable tax credit that helps lower taxable income. Or, especially when their parents, if their parents are paying for the tuition, they can do the kind thing and transfer any, if they're not going to use any of that tuition credit for that year, they can transfer it to their parent, or if it's a spouse, they can do that. They got to fill out this back, put how much it is, sign it, date it. We keep a copy on file. They keep a copy just in case the CRA needs to check anything. All right. Interesting. It's we're going to go, I think we're going to talk more about transferring in a second. What time do we got, guys? 7:20. Okay, still pretty good. All right, now there's the over $100 rule. Okay, so you can claim tuition fees, but they have to be a minimum of $100.01, as your textbook says. So they got to exceed over $100. Okay, but if you're paying for, now that's for a single institution, but you can, if you took different courses at different institutions and they all add up to over $100, still cannot claim it. It has to be, each institution has to be minimum $100. So if you took a course for $50 here, a course for $75 there, you cannot claim both those for any tuition credit. It has to be minimum $100 each. So all of you would be able to claim your tuition credit for this course, right? Because your course is over $100. Is that correct? Is that right? I think this course is over $100. It's like 300 something. But I can make a request to the ULearn department that, based on some of your lack of participation, to knock off enough money to make under $100 so you can claim. Is that okay? Can I do that, guys? See, I should expect everyone commenting now, participating. It's like, no. That's right. Yeah, I'll give you a also, and the teacher will also give you a scholarship and a bonus. Actually, I heard that those of you who compliment your teacher and saying that he's the best and awesome, they turn and say, well, then you shouldn't have to pay for this course then, because the payment's already in the value of the teacher. All right. Okay. So that's pretty straightforward. Okay. Tuition's paid by a third party. So if someone else is paying for your tuition, you cannot qualify to, they do not qualify as tuition fees to claim as a credit. So whether it's through federal or provincial job training programs, I've seen that, maybe Tyrannies too. I've seen clients that, have gotten to help them get back in the workforce properly, or they've been out of it for a while. The government, whether usually provincial, will, they'll get to take they'll pay for some courses for them to take. Again, those are not, you can't claim them as a credit. Or if there's an athletic program where you're sponsored, or if you're paid by your company. So, if and we have that too. There's many. There's a number of clients that have to go take courses that's required for their job, and the company will pay for them. And we always ask that because they'll still get a T2202 if they have to go to a university or some registered institution. But we'll always ask them, did you pay for this course? Or oh no, my company paid for it. So even if they got a T2202 that shows the breakdown of how many months, if the company paid for it, then they're not eligible to claim as a credit. Or if they had to pay it themselves and then the company reimbursed them, their employer reimbursed them, same thing. And also if it's the employer of the individual's parent and no related amount is including them. So that means that so again, like it's like, well, if my dad's company, even though I don't work for my dad's company, if they because they want to help out my dad or whatever, because maybe one day I was going to work in the same company, if they end up paying my education, again, you cannot claim those tuition fees either. Okay. So that's also mentioned in the paragraph in your textbook. Now, institutions outside of Canada. All right, this is there's some rules to that. They can be claimed if the institution's a university, or like in the States, they also call them colleges, but they're also still universities. Some just by the name, right? Like there's Boston College, and then there's Harvard University, right? Or there's MIT, like Institute of Technology, but they're still universities or accredited. The student is in full-time attendance in a course leading to a degree, and the course duration is at least 3 consecutive weeks. And in this case, the 100 rule does not apply when these requirements are met. Okay. And again, the word university does not have to appear in the name, because again, a lot of university, basically every university in the States has different names. California Institute of Technology, or Dartmouth College, or whatever, whatever, so many different kinds, right? Texas A&M, and they don't actually might have the word university in it. Okay. Now, even though the 100 fee rule does not apply if these requirements are met, again, if the tuitions are paid by a third party, like we discussed, if it's through an employer or your parent's employer or some kind of organization that wants to pay you, then you cannot claim this tuition credit. And then if you do, then you would put it on this on line 32001. It would go on your tax return, which when you calculating your on your schedule 11, That's where you put it. Eligible tuition fees paid to foreign educational institutions. Okay. Next year it'll be for 2025. Right. And then tuition receipts. So you need proper documentation to claim tuition fees. And like I said, the T2202 is the most common one that you get in Canada. Okay, all across the board, no matter where you go. BCIT, you know, Kwantlen Polytech University, University of BC, or Trinity Western, or whatever. York University, doesn't matter where in Canada, University of Alberta, you always look at a T2202 when you go and enroll in a program through them. And that also includes flying school or club in Canada. It used to be at one time a separate, but now if you do, it used to be called a, you don't need to know about this, it used to be called a T11B if you went to a flying school. But since 2019, they are now reporting on T2202 to make it easier. So there's no, and it tells you what box it is to show that you went to a flying school. I think it's box, where is it here? If you look on the T2202 in your textbook, it's box 12, flying school or club. Okay. So to make it easier, all right. And if you are going to any university outside of Canada, these are the kind of documentation, like in other words, almost, sort of like a receipt, kind of like the official receipt that you would need. A TL11A, that's the one if you, for pretty much if you are studying in the U.S. as a Canadian citizen. Then there's a T11C commuter to the U.S. That means, like, say you live here, but you're attending school over the border, like you're just going over the border in Washington, and you're attending, Washington University, but then you come back and forth. You just go there for school, and you drive back home. Then you would get a TL11C from the university, and if you are attending outside of Canada and considered deemed a resident of Canada, it's a T11D. So TL11A, C, or D. And your textbook does have those all in there. You're not required to memorize these things, guys. Okay? You don't need to memorize them. It's just know which ones they are. It's in your textbook. If you can remember, great. 2202 is the main one, because that's the majority of the ones you're going to be seeing if you're doing income taxes here. And then if you do get, remember it's T11A, C, or D. But it's also in your textbook, okay? Any questions so far, guys? Remember, this adds to your tuition reimbursement for your tuition credit. Any questions? No? All good? All right, Genevieve. Well, I forgot to say, the first one also gets a scholarship, so Genevieve's the only one that gets a scholarship. Too late, guys. Yeah. The scholarship is my friendship to you. Participation rewards? All right. Okay, let's do a knowledge break. Actually, we don't have too much left to go. Okay, true or false? All scholarship income is always exempt from tax, and you can write it on the screen or in the textbook. There you go. That's beautiful, Brittany. I'm going to put that into a song. I'm going to write a song. I'm going to use those words. That's so nice. The love you take is equal to the love you make. All right, false. And I'm assuming no. This hump thing here, I don't know what that is. Maybe that is, this N here is just to finish writing my name. The answer is false. That's right, because remember, There are some it says all scholarship income is always exempt, not necessarily. Remember, some of it is, but some of it is, and then what is it again? Well, some of it is, and some of it is, and some of it ain't. Actually, it's the other way around. It's mostly taxable with exemptions. So, um, well, no, sorry, sorry, they're keyword. They're not always exempt from tax. You know, some of them are taxable depending on those exceptions, like going to school full time and being a qualified student in the program for uh, full time student. Okay, good. And then true or false? If you qualify, it is possible to claim tuition paid to a post-secondary institution outside of Canada. True or false? If you qualify, it is possible to claim tuition paid to a post-secondary institution outside of Canada. True or false? What do you guys think? The answer is true. Yeah, of course. If you qualify and you know, and remember, you get if you go depending what if you're a commuter or if you're staying, you get a T11. Was it T11A, or if you're commuting back and forth, T11C, or a D if you're a deemed resident. Okay, good job, everyone. All right, one more. If your only tuition is from a local college and the T22 shows $100, you can claim this on your tax return. True or false? Oh, somebody again put an N there for. Thank you very much for thinking of me. The answer is false, because why? Tuition has to be greater than $100.01. That's right. Yeah. Oh no, local college is fine. This is okay. It's this. Remember, it has to be more than $100 to claim it as a refundable non-refundable tax credit. All right. Local college. I mean, what's a local college? Langara is a local college here in Vancouver, or Vancouver Community College, right? I mean, there's colleges with the name of the city in them. Those are local colleges. They're accredited, licensed, but it has to be over $100. Correct. Excellent. Well done, guys. I like it how you have I'm glad you have a lot of fun on the annotation thing. You know, yay! That's my smiley face there with a really weird eye there. False. Oh, somebody getting fancy and writing it all down. Nice. Okay, very good. All right. So, Schedule 11, again, when you're claiming this on the Schedule 11, line 32,000 is the amounts paid. 32001 is if you pay outside of Canada. And then if you're eligible for the disability tax credit, you this enrollment information has been entered 32005. Box 32010, box 32020. So that's all going to show up on the where is it here? Let me open this up. So here, like, so if you haven't, make sure you you put this Schedule 11 in your favorites. Okay, so line 3200. Right here, this is the most common one you'll have filled out here. All right, if you're going to go outside of Canada, then there's this line 32001. But if there's anything specific that has to go down here, if there was a disability involved to claim a disability tax credit, then you would check this box, okay, and enter the number of months you were part-time or full-time. Okay, so it would be an actual number, right? 8 or 4, whatever, right? Okay, that would be in there. And you would know from looking at the T 2202. Okay, the tuition credit claimed and our charge for the year is calculated on Schedule 11. We already talked about that. Credits must be applied to reduce the student's taxable payable to 0. That's why it's a non-refundable tax credit. And it's claimed on line 32300 in Part B of Step 5. If you're transferring it, it's on line 32700, Schedule 11. Okay, so that was below this part, right? So if you are transferring it, then you would fill out this part below here. How much you're going to transfer, how much unused. The maximum you can transfer to spouse or your parent or grandparent is $5,000, and then whatever's left over is carried forward to another year. Okay. So I have some students that have actually, sorry, not students. This one client that saw me, actually called me. He's our client. When I say my client, well, he's our client. He's not. I didn't deal with him specifically. It was our client, and he had a question about his tuition tax credits. Oh no, he came in the office. He came out. So he's going. He's planning to go to Japan, and he wants to live there permanently. Get a job there and live there. And he says, so he's asking some information about, what about doing his tax return this year. And I told him, well, you got to do this and this because, you still got to file a tax return if you have income, but you also have to, check in Japan too what their tax-free laws are with claiming income and stuff. And he said, well, what about my tuition credits? Like, can I get that money back? And I said, no, it's not money. It's an amount that becomes as used towards credit. So I went and checked on him, the CRA for him, and he has $70,000-$80,000 of available tuition credit, but he doesn't have any. For whatever reason, he doesn't have the income to use it. So I said, unless you have taxable income, you can't use it. And if you're leaving Canada to actually if you're going to cut ties with Canada, live in Japan, that money to be used as a credit is just going to sit in your account until you come back to Canada and you work, and you have taxable income to write off. So sometimes you may never end up using your tuition credit if it keeps carrying forward, if you never have enough taxable income. And sometimes, depending on how much you have, you could use it pretty much right away once you have taxable income. So in your textbook, if you have your textbooks open, I hope you do. Do you? No? Illustration. Where are we here? 13-5. So illustration 13-5, example of completing a Schedule 11. So take a look at that. That's gives you the example of Mal McAdam, 21 years old, full-time. He's got his T2202. It's all filled out, and then you go about, and it shows you how to fill. So that's a good example right there. It's very straightforward. It's not really hard. This is pretty easy. Now, if you're transferring it, again, you can transfer to a spouse or common law, parent or grandparent, or the spouse's common law parents or grandparent. As well, married or common law students may transfer unused to a parent or grandparent only if their spouse does not claim any of the amounts. Like if you're not transferring it to your to one another, if they're not claiming it, then you can do that as well. Okay. Now again, before you can transfer, you have to calculate how much is available to transfer on a Schedule 11. Like I said, up to a maximum of 5,000 if there's enough. And then it's entered on line 32700 of the Schedule 11. And it is not possible to transfer any amounts that were previously carried forward. So guys, class, this is important. And we get asked this sometimes, right? when a client, if they have any, so if they have tuition, like I had this one client, his daughter came, we did it, he was, and I said, well, and we're trying to help him. And I said, well, your daughter, she doesn't have much income. We can transfer these unused amounts, to help lower your taxable income, because was self-employed. And he said, oh, is that okay? And his daughter said, yeah, I could do that for you. And he's like, oh, well, I go, what about, like, I said, oh, and the daughter had, she had previous amounts from previous years of tuition credit she never used. And he's like, oh, can we use the ones from previous? And I said, no, you can only transfer the amount of the current year. So if you didn't transfer your tuition credit this year, then next year, if you had more tuition credit to transfer, it's only for that year that you did it. Not You cannot add. You cannot go back from previous years to carry forward, and you have to transfer in the year that the tuition is claimed. All right. Yes, exactly. I like this smiley face. Very good. And again, they got to sign the back of that T2202 that shows who they're transferring the amount to. Okay. Everyone understand about that, about carrying forward tuition? It's only for the year that you're claiming it. You can transfer only for the current year. Everyone okay? You understand this part? Yeah. Okay. All right. So when you're claiming the transfer amount, whoever is going to claim it, so you got to put on your return that you're designating it. Okay, so whoever's claiming it, they have to put it on line 32400 in step 5 of part B. And a spouse or common law partner, they would claim a tuition transfer on schedule 2, and it's included with any other transfers as a total on line 32600 in step 5 part V. So you guys are familiar with the schedule 2, I believe. I think you guys had to do one or look at one or in your assignment, but again, so remember the transferring, right? So again, whatever, if like you see, you have the age amount, pension income. Oh, there it is, tuition amount. So whatever you're adding in here, if there was pension, you're splitting, right, maximum of 2,000. Then all that you add up the number, base it off their net their taxable income, and then the result is what's being transferred in line 3260 when you're transferring personal amounts to your spouse. Okay. All right. Poll question. What time do we have here? Okay. Well, let's well, since I showed you this one, let's do this poll question, and let's take a break. Okay. How's that sound? Does that sound good, guys? Oh, sorry. But for Schedule 11 calculation, line 9 will go all the way down. What do you mean? It's line 9. Let me see here. Schedule 11, line 9. Like you're talking about this unused federal tuition. Yeah, if you did, if you had any from the previous, like, so it all adds up. So if you had from 21, 22, as of 23, you'll get on your notice of assessment what the actual amount is, your total amount of unused, and then you would have to put that in here, unused, and then the total available, right? When you add the two from, yeah, so you include your tuition plus unused, and then again determining the amount that you can claim. Then your answer here on line 17 will go as line 32300 of the amount that you can claim as a non-federal tax credit. You got that, Jenny? Does that make sense? Everyone, good? Yes? Jenny? All right. Okay, good. Okay, let's do this poll question and we'll take a break. Um, True or false? Scholarship income for students is always taxable. Scholarship income for two is always. So then we have a similar question like that, or was it just the wording was different? You see, it was the wording, right? So you're gonna get questions like that. What was it? Scholarship income is always exempt from tax. That was the last one in knowledge break. All scholarship income is always exempt from tax. This one's saying scholarship income is always taxable. So you see a little bit of wordplay there. And the answer is false. Correct. Excellent, class. You know what? Because you answered and you did so good at answering that question, you deserve a break. All right. So let's take a break. We have a few more slides to go through. And actually, it says right here, take a break. So let's take a break, and then we got a few more slides I'm going to try to go through so we can spend some time to go over assignment chapter, assignment number 2. If you want, though, I don't know. I mean, I don't think you guys need it because you guys are so good at what you're doing. So, right? You guys don't need to. Okay, so it is 7:49. So do you guys do you want a 15-minute break? Do you need 10? Okay, break time until just turned 8:05. Okay. All right. I'll try not to go over 9 o'clock. Like I will. I do want to respect time, but you guys, we'll have a few days off. But I want to make sure you guys we spend enough time to go over at least read the problem and pick out any things. But uh, enjoy the break. We'll see you at in 15 minutes. Well, we're not going to go. Yeah. Okay. You're okay to go over today? Okay. All right. Well, if anybody's upset, then get mad. Then blame Boomy. All right. See you guys in a few. Enjoy your little break. should leave here. Get ahead, go far away. But you know that there's nowhere I'd rather be than with you here today. Okay, welcome back, class. It's 8:05. Let's get back into it. Hope you guys are got your second wind and you're refreshed. So we got a few more. We got a bunch of knowledge breaks to go over, and then a couple more things from the chapter, and then we should have time to go over assignment 2 together. prep it, I mean, not actually go over it to do it, but you know what I mean. Okay, so Marwin is a full-time student, has a T4 showing $4,000 in scholarship income. Marwin's T2202 shows 8 months full-time with tuition paid of $3,500. If Marwin's taxable income is $8,000, how much tuition credits must be used to reduce their federal taxes payable to zero? What do you think the answer is? If Marwin's taxable income is $8,000, how much tuition credits must be used to reduce their federal tax payables to zero? So I hope you guys are already here. Watch, but before you think you overcomplicate before you overcomplicate things, look for right away. What's the key word here? Taxable income. So what does that tell you right there? What does that tell you about the so it's not like it's rocket science where you gotta spend a whole bunch of calculation. If his taxable income is less than the basic personal amount, then how much tuition credits does he need to reduce his taxable credits to zero? Zero. Exactly, because remember, tuition credits are to reduce taxable income. So, like I said, there's a lot of students that don't get work or get the money, the income to start using their tuition credit, or they're not going to school, or they're not working while they're going to school. So it gets carried forwarded, or if they want to transfer it. So the answer is zero. Okay. How about this one? If it's $21,000 and his non-refundable tax credits is $19,500, how much would he have to pay? How much tuition credits would he need to reduce his federal taxes to zero? So what do you think? Again, it's the numbers are there. What do you think? It's just straight. So, okay, so his taxable income is $21,000. It exceeds his non-refundable by 19. So how much more tuition credit would he need? $1,500. Yeah, just straight subtracting. That's all it is. It's not as as over thinking as you might think it is, right? It's some of it's just read the question and it's just straight math, right? Okay, so the answer is 21,000 minus 19,500 gives you 1,500. Okay, good. All right, how about this one? Recall, Marwin is a full-time student and has a T4A showing $4,000 in scholarship income. Marwin's 2202 shows 8 months with tuition paid of $335. So that was from before, right? The previous slide. If Marwin's taxable income is $91,000 and his non-refundable tax credits is $24,500, how much tuition credit of the $3,500 must be used? How much? He's got $3,500 tuition. So how much of the $3,500 must he use? Everybody agree with Shima? Yeah, all of it. Because I mean, his taxable, look at it, it's 91. Even when you take out the 24 or 5, you still got quite a bit of taxable income. So yeah, you use all of it. All 3,500 can be used. Very good. Okay, we're on a roll here. How about this one? Back with Marwin. He's a full-time student, 4,000 scholarship, 3,500 of tuition. If he had a taxable income of $8,000, Marwin would have to use $0 of the tuition credits. What can Marwin do with the $3,500 of unused tuition fees? What can he do? there's a few options. There's actually 3 options he can do. What's one of them? Okay, transfer to what? Remember transfer to. So okay, carry forward. That's one option. All right, he carry forwards it to himself to use in the future. Spouse. Okay, so remember the carry forward is the easiest one, right? You could just carry it forward. But the other 2 options, you are right, they can be transferred, but it could be either up to 3,500 or all of 3,500. So it all depends. He can transfer all of it to a spouse or parent or grandparent, or he could transfer up to it, up to 3,500. Right? Yeah, that's already been answered. The carry forward's been answered. That one, Amandeep answered it. Brittany, Terry, yeah, you guys answered that. The carry forward. Sorry, Nikhil answered that. Terry, yeah, the carry forward. Shima, that's right. You can carry forward, but the transfer part can be either all of it or up to it. So you don't. When you transfer, it doesn't mean you have to transfer all of the tuition. Now, remember, according to the Schedule 11, what's the maximum you can transfer? Remember the amount? 5,000. So we know that he's not over the limit. Like he's not over the maximum. So again, depending on um, the situation, whether to do, we don't care. It doesn't matter because it doesn't ask us. It's just the options are he could carry forward it to himself to use in a future year. He can transfer all of it, all of 3,500 to a spouse or parent, grandparent, or he can transfer up to it. So it could be even like just 2,000 or 1,000. So he has those options. Okay, very good. Okay, Canada Training Act. All right, so sorry, Canada Training Act, Canada Training Credit. So this was created in 2020. It was to provide a refundable tax credit for taxpayers aged 26 to 65 who want to further their education. Okay. They have to be a resident for the entire year to claim this amount. It's 250 per year and it accumulates depending on working income in the previous year. But it's usually 250 per year up to a maximum lifetime of 5,000. And the credit is a lesser of the Canada training limit from the latest notice of assessment or 50% of the eligible tuition fees for the current year. And you calculate that on the Schedule 11. Okay. And your textbook talks about the Canada training limit. It says what the threshold is. Like working income of at least 10,000 and less than 150, 100, like it goes up every year. So if you're the requirement, so if your minimum, well, as of last year, if your minimum 11,821 and less than 173, you get the 200, you get the full 250. And pretty much most people, majority that are between 26 and 65 that are working will definitely make more than 10,000 a year, right? They're how they're going to live, right? So but again, if you don't use it, it just sits, it just stays in your, it's in your record in the CRA. Is anybody familiar with this Canada training credit? Have they seen it or used it? No. If does do you does do any of you have a My account with a CRA? Oh, good, Terry, you've used it. Do any of you have a My account with a CRA? So if you go on My account, you'll look. It'll show you like I don't know what it's benefits and credits. It'll show like your like the duck like it'll show Canada training credit. And it'll say you have two like this like it'll show the year that you have 250, 250, 250, and it'll just sit there until you are eligible to use it if you are going to school. And it just that credit comes off your it just comes off your tuition, whether it's the full amount, like up to 5,000, or 50%. It's a lesser of either 5,000 if you maxed it, or 50% of the tuitions you made. Okay. Illustration 13-8 is an example of the Canada training credit. Again, this is not something like basically as it says in the textbook, when you calculate it, you claim it. It's calculated on lines 2 to 5 of the Schedule 11 and claimed on 45,350 the return. And again, and your example, illustration 13-9, that's a good example of the CTC, okay? As it shows here, like this example, okay, so, oops, what happened here? 13-9, Marion, she's 28, so she's in between, so she's in the age bracket, 26 to 26 to 65 age bracket. She's going back to school. She paid $1,700 for a course. Okay, it was certified. Now her limit, based on her 2023 notice assessment, is $750 because she never used it for. So since 2020, when it's incorporated, well, that's 250 times or 2028. So the moment she turned 26, so there's three years of Canada training limits she didn't use, right? 26, 27, and now 28. So according to CRA, she has 750 of this credit to use. So instead of claiming the tuition fees of $1,700, she can claim the Canada training credit of $750 and tuition fees of $950. So as you see in the text in the illustration, her fees are $1,700. 50% of that is $850. Her CTC from the notice assessment Canada training credit $750. Take whichever's less, put it there, and then you take line 1 minus 5, $950. That's how much she claims as that's what she would be claiming on her tax return. If you're eligible, don't forget this is from the either a T2202 or an official receipt. This amount, remember the amount that you put here, eligible tuition fees paid. This will come from a T2202, right? But to determine if you qualify for the CTC, then you got to fill out the rest, right? If you are between the age of 26 and 65. So you look at your notice of it. So obviously you would bring down the amount of the tuition, take 50% of that, then you would put in the amount of your CTC based on your latest notice of assessment, and then you take whatever's less, and then you would apply, right? Enter the amount of the Canada training, if you're claiming, cannot be more than the amount of line 4, right? So it's got to be whatever is left over. That amount, the 750, or sorry, this 750 goes on to line 45 through that. So that's a refundable credit. Yeah. So pretty straightforward. To determine this refundable credit, that's what you would do. Okay. But no matter what, the first and foremost thing is this thing, requirement. If you're 26 to 65 going back to school. All right. So there it is. I just showed you an example in the illustration. That's what it looks like. Okay, that's the part of the form you would fill out to determine how much would go on line 45350 of the of your return. Okay. All right. Next, interprovincial transfers carry forwards. So there are some specific rules for interprovincial transfers and carry forwards. Depending on the situation, the allowable amount may be based on the originating province or the province where the transfer will be claimed. These are so just to put your mind at ease, don't worry about this stuff. It's uncommon, and rather than trying to do this from memory, we have a chart. Okay, we just usually like we have information to find on this. In this case, if you wanted to further investigate, if you go into your library, into your Inkling, and you look up, you go into facts and figures in your Inkling. It's in your, when you go to facts and figures, I believe, where is it here? Intergalactic. Where is it? Federal. I just saw something. Interprovincial, right here. Figure 53. If you want to make a note of it for further, maybe I'll type it in the chat here. Okay, for interprovincial transfers, carry forwards, see figure 53 in facts and figures textbook. Again, you don't need to like have this anything memorized. You would just refer to this and find, okay, BC. All right, and then there's some just a little bit of information on transfers of from a child or disability or carry forward. Okay. BC is very similar to how you would transfer in federal as well. It's pretty similar. It's pretty much the same. I don't think there's anything really super special. It's just saying that there might be some provinces that, because it varies from different provinces. BC, I think there's no special, anything really special. I think it's just straight. There's no special exceptions. It's just that you get a little bit of. Actually, no, I think it's exactly the same. I think the credits will be the same. Yeah. But like I said, don't need to worry about this or memorize it. And I don't even think it's going to be even asked in exam because it's to do with provincial. All right. But it's there for you to know. Okay. And even your textbook says that about provincial tuition and fees. Consult the provincial supplement in your book, or interprovincial tuition. Some of these rules be found in facts and figures, while the individual rules for each province is listed. So, as it says, some provinces, they may be able to carry, they might be more, as it says, more generous with tuition, education, textbooks than other provinces. I believe BC is exactly the same as federal. I don't think there's no, there's no special generous offers, like they don't add textbooks and stuff like that. I think it's exactly, they follow the same guidelines as the federal. But just double read it anyways if you want to read that, just for your information, to know that there could be some differences, but I don't think so in my experience. I don't think there was anything that stood out. Usually it turns out to be exactly the same, the provincial transfer credits as the federal. Okay, moving expenses. All right, so they may technically be able to deduct eligible moving costs if their new place of residence is at least what? Same as the work, at least. Remember the work one? Same with the work, at least, yeah, 40 kilometers closer to the institution of their old residence. Okay, and it's set so. These new expenses for full-time students are limited to the taxable amount of their scholarship and bursary income. Since scholarships, as we said, are usually tax exempt, this provision is generally applicable to research grants, because research grants usually you're getting money, you're getting, whereas, so this is where moving expenses will be helpful. If they have summer jobs, they must meet the change of residence requirement, and determining a student's correct province of residence is important. So it says in your textbook, in order for moving expenses to be claimed, one of the following situations must be applicable. Okay, the student must have taxable income, a taxable scholarship and bursary income at the new location. Because the ward for most full-time students is exempt, usually most full-time students are not eligible to claim moving expenses for their moves to attending school. Because again, you have to have income, right, to claim moving expenses, okay? And so most students, whether they get scholarships or not, it's paid for. They go, so they can't claim any moving expenses. Because what does moving expenses do? What are expenses? What do they are? What's moving expenses? Remember, they are a deduction. That's right. So if you don't have income, how are you going to deduct your moving expenses, right? And as it says in your paragraph, there's those 2 bullet points. Must have taxable scholarship or bursary income, but again, most of it's exempt, so they don't get to claim. Or they must have employment income, including summer employment at a new location. And as it says, it works as the same way when you're moving for a new job as in Chapter 5. And it says, while students usually do not have a lot of taxes to pay, claiming moving expenses reduces their taxable income. So, again, it all depends on whether they have income or not. Okay. Also, it doesn't say. I don't think it says it here in the textbook, but. The change of residence, like say for like a summer job, does not count if they were being provided with accommodation, like staff quarters or bunkhouse, or they just worked. They were working, and they went back. They just went back and forth to the same address when they returned to school. It's usually if they had to go and rent, they had to go live somewhere, and they had to have monthly rent accommodation at the job. Then they would qualify. Okay. Um, Okay, so there's that. Okay, adult basic education assistance. Okay, if an adult receives government assistance to upgrade their education, it's included as income. The amount on line 11900, what it would be is they would get a T4E, like for like a T4E SIP, which is usually for collecting EI, but it could be towards taking a course. So if it was non-taxable, it would show in box 21 of a T4E, and it would be deducted. It would go in and come back out, just kind of like social assistance. But if they were taxable, it'd be in box 20 of a T4E, and then they would qualify to claim tuition fees. Okay. And this is straightforward. It would just be on a T4E, and it's again, you get when you're on EI, the government gives you a T4E for that. If the government is assisting you to upgrade your education, then if it's non-taxable, it's in box 21, goes in, reported as income, comes back out as a deduction. If it's taxable, it's income as box 20, and then you can claim that credit for the tuition fee, how much, which they would get a 2202 for as well. Pretty straightforward. Okay, almost done this chapter. Okay, true or false? And all adult taxpayers between 25 and 65 can claim the Canada Trading Credit. True or false? Oh, we're split on that one. We got false and we got true. I know this much is true. Why do some of you say true and why do you say false? Oh, somebody wrote 26. I see that. So, what was the minimum age? 26. Somebody wrote that in. So, there it is. It's between ages 26 and 65, not 25. So, the answer is false. Okay. Any questions so far about this chapter? So far, any questions? Anything? Anyone? No? Okay, so what do we got here? What's next? Okay, so yeah, just remind you again, we got a problem 13-1. That's your assignment due on Saturday. There's no classes Thursday. It'll be due before Saturday, due November 24th, Friday. We do recommend getting it done before class because we will review it at the end of class. And if I will know if you didn't do it, and so make sure you do it before class. Okay, recommend it to do it at least the day before because we're going to go over it. So remember, read the problem carefully. It's the same manner as you did assignment 1. You go to ULearn. Was it view your transcripts? Tax Academy level 1. Assignment 2. You got to read the instruction booklet and mark it complete before you can start. You can open up the assignment and answer the questions. But again, you can read the booklet first, mark it complete, then start working on the problem. Get your fillables, get everything you have everything ready and answered. And then when you're ready to do the assignment, then you go back in the ULearn, open the assignment, and do it. Remember, you can't pause and come back. Once you open it, the clock starts ticking. And have a drumstick in your brain stops ticking. So make sure you follow and answer properly. The instruction booklet is very thorough about how you enter line items. No dollar sign. Put the 2 decimal places, right? Okay. Even though you don't need 3 hours, you're given 3 hours of time to do it. I think some of you it only took maybe 20 minutes, half an hour. Again, don't open the assignment until you have finished all the steps of the above, like basically from those from the instructions, okay, that you read an instruction. All right. Don't use a dollar symbol. Numbers only with the correct use of comma. Remember, comma and then 2 decimal points. Everybody remember that from last time? I hope nobody, or maybe there was maybe one or two of you that maybe made a number error or like the symbol. But remember that. Okay, so basically looked at the different forms of types of income, and if you want to say money that students can get and how you report it, the registered education savings plan. Remember, you had your promoter and your subscriber and the beneficiary, right? So your subscriber is usually the parent who sets up the RESP with the provider or the promoter, which is the bank, and the beneficiary usually is the child that would get this money. Whatever the amount is contributed is tax-free, but whatever income was generated is taxable to the subscriber. Okay, and also we talked about claiming loose student loan interest, but since 2021 at April 1st, if you didn't have any tuition prior then you don't have to pay back interest, just pay back the loan. So there you go. What else is there? We learned about doing Schedule 11, tuition amounts and what you can carry forward. We talked about the adult basic education assistance through the government and moving expenses as well as the Canada training credit. So again, your assignment, and I'm going to put this in your email, is to finish assignment 2. If you can, by Saturday, read chapter 14 and 15 and the provincial supplement, I guess, or at least go over it. Now, it says read chapter review problem 15-1 and identify the errors. So I don't think you actually have to do the aside, like do it in, like do the, do it in, like with line numbers. I think it's just identifying errors, okay? I know you guys have this assignment too that you really are trying to work on. and that'll be your focus. But please try to at least take some time to read these chapters, chapter 14 and 15, which is to do with provincial supplements and administration and accounts stuff with my account. So not too much heavy stuff. Okay, and then this will be in your slides, but we're not going to go over chapter 13-2. I'll give you the main line items for 13-2, as some of you have asked for this. Okay, and then just, but again, this was an optional, all right? So no need to worry about that. But what you're concerned with is 13-1, correct? What time is it? Oh, we're over time, sorry. It's, I'm going by Eastern time. It's already 11:30. Sorry for keeping you so late. Okay, so all right. So hold on here. Let me bring this over. Where are we here? 13-1. We got, what time is it? 8:36. Okay, let's see. I don't think it'll take us more than an hour to go over it, but let's no. Let's kind of go over it together. Let's see here. So we got 3 people. We got Parker, Morgan, and the child, Ash. Well, they got 2 children, but Ash is the one I guess going to school. So what do we have here? So let me see, can I pull up a fillable? Just take a look here. Oops. So Parker, Morgan, and we have this child, Parker, Morgan. Okay, so yes, and good looking. Well, that's subject to the eye of the beholder, I guess. Okay, so you guys ready? Are we all listening? This is it. If you haven't listened to me at all today, now's the time to listen. All right? You guys ready? I can't hear you. All right. Okay. Oh, Jenny, you're ready. Oh, thanks for joining us. You didn't answer my question in slide number 2. You think I can remember self-test number 2? I'm going to remember that. Self-test number 2. You didn't answer when you gave the answer. The reasoning. Oh, I'm going to hold grudges. No, just kidding. Okay. All right. So where are we here? Morgan Parker. They're common law partners and parents of 2 children. Okay. Ash is born in 2005. Ash Avery in 2014. Ash is single with no children. Avery does not have an income. Okay. Ash graduated from secondary school in June, receiving a scholarship. Okay, so he got a T4A with $5,500. He took the summer off to do some traveling. Okay, that's fine. He came back to school in September, went full time. He lives on the university residence, but he uses his home address as his official. Okay. In addition to tuition of $3,000, so he's got tuition of $3,000. Ash spent $350 on books, $25 for student association fees. Now I'm just highlighting these guys. We're highlighting numbers to just to know what's going on, okay? But then we got to determine what's relevant, right? He's got a T2202, okay, that he went for full time for 4 months. And he specifically wants to transfer the maximum amount, okay, to his parents. Okay, so we know the maximum is how much? $5,000. But What's his tuition? 3,000. So we gotta remember that. Okay, so just remember that. Okay, Parker, he's a meteorologist. That means he studies meteors. And Morgan's a part-time graphic artist. They got okay. So they paid the following expenses in 2024, and they were not reimbursed by the insurance. So they got orthodontist, chiropractor. Forget about this note because we're not in the territories. He's got receipts. The only other medical was 2000 tour. Okay, so he paid through work. Okay, so that means it would show up on his it'd probably be usually box 85. So it doesn't matter because it's paid through work. Well, it is. Well, I shouldn't say. Doesn't matter. Just okay. So he paid through work. Let's just leave that for a second. Okay. I don't want to go too deep. Let's. Okay. The wife was in a hospital for 6 weeks. All her expenses are covered for the health plan. They paid this woman. She's got her SIN. Remember, if you're hiring somebody like a babysitter, you need to have their SIN number to report. So 2,500. Okay. All right. That was the total. They both have RSP contributes. Parker contributed 4,000 into his own RSP account in December 24, and then 5,000 into a spousal in January. Morgan has not contributed an RSP the last 4 years. His deduction limit, Parker's is 55,000. Morgan's is 2,500. Okay. They're all Canadian citizens. They don't own, they don't have any foreign property. Okay. All right. Don't worry about the CMA thing. So there's Parker's T4, Morgan's T4. There's Ash's scholarship, right? He received a scholarship, so there's his T4A for scholarship. There's his T2202 showing the tuition paid and the number of months full time. So again, so do this without. Okay, so let's see here. Well, okay, so let's see if this helps you here. Well, some of this is straightforward, okay? How much of the scholarship must Ash include in the income? So how much of the scholarship is income? He's a full-time student getting scholarship. Guys, did you already forget? You guys even answered a poll question, true or false. Is scholarship income taxable? Unless you're a one of the exceptions. If you get a scholarship while you're attending school, what time? Eligible, yeah, and you're doing what? Full time, right? So, how much of the scholarship must include an income? Zero, right? whatever you want to put in the word 0. Okay, let's call it. So, all right. Ash is filling his own tax return. Will he receive a GST? Yes or no? So, this is his first, right? He's um nine he's 19, or no, he's 18. Or is it July? He's 20, right? This year. So, will he receive a GST credit, and why? Yes or no? So, pay attention to the question, Amandeep. Ash is filing his own retirement. Will he receive a GST credit? Yes or no? Yes, because he turned 19, right? So he turned 19, so he'll be receiving. Remember, you have to turn 19. Yeah, once you turn 19, you're eligible to get GST when you turn 19. Okay. How much of the expenses for books and association fees can Ash claim on his tax return? So none, right? 0. Oops. So he cannot claim he cannot claim expenses for books and association fees, as they are not eligible, right? They're not eligible expenses. Remember we saw that, right? Tuition in your textbook. So, where was it? So yeah, see, they do not include cost of books or student association fees. So there you go. So they are not eligible tuition fees. Okay. They are not eligible tuition fees. So you might get questions like this on the assignment as well. Maybe not worded exactly like this, but it might be. Explain. Uh, I don't want this one. I don't want to answer it because you have to calculate. But I will give you a hint on that one. Um, okay, what about medical expenses? What medical expenses can he claim? He's got a 2100 orthodontist, right? The two orthodontists, right? Because you can claim for the you can claim for the child as well, right? The chiropractor, What else is there? What do we got? What else can you claim for medical? Anything else you see? So we got we got so we got this one. We got the for Ash, or for Ash can be claimed. I'm not saying who can claim it. I'm just saying these are the ones you can claim. There's odontos for Ash. The 5,000 orthodontists. Oops. That was for Avery. And the chiropractor. That was for Morgan. Anything else? What does that add up to so far? 5. What is it? 5, 7, 9. That's right. So there's also the 1,500 from the T4. Very good, Terry. Remember, said he pays a private health insurance plan through work, and there it is. That's the one, box 85. So there's the 1,500. Now we're not saying who's claiming it. We're just listing what can be claimed. So there's the private health plan. Private health. Health plan of 1,500 from what's his name? From Parker's T4. Okay, well, who should claim the medical expenses? So, usually, what's the rule of thumb? Who claims usually medical expenses? What's the rule of thumb, guys? It's usually the one with the lower income. But how much income does... So who's the lower income? It's Morgan, right? So what does Morgan have? So her income is already less than the basic personal amount. So in this case, it doesn't benefit her. So in this case, who would claim it? Parker, right? That's right. Or Marker, or Peter. Peter Parker? Spider-Man? Oh, that's awesome. But Spider-Man doesn't need medical expenses. We got Marker, Peter Parker. So yeah, so Parker, because in this case, Morgan's taxable income is less than the BPA. BPA. Okay. Well, calculate the amount of medical expenses to be claimed. I can't do that for you. I think you know how to do that. But just hold on here. I want to check something here. Just give me one moment. I want to calculate something. I'd ask Tarani to do it for me, but I think this is around the time that Tarani takes her nap, her evening nap during class, so I don't want to disturb her. Lots of fun. Okay, let's see here. So, where is it? I want to check this. I want to calculate something. See the work I'm doing for you guys just so you guys can pass this assignment. I gotta pull up this form. I gotta do this. Ay, 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 where is it? Oh yeah, she's earned the nap from doing what, Brittany? From sending you one line from a website? And what do I get to earn? Nothing. Butt kiss. Okay, where is it here? Okay, so I'm going to help you out with this one because I think you guys might. Well, you shouldn't. Okay, but okay, so sorry, bear with me. This is important. I gotta make sure. Where is it? So, for example, so do you remember if okay, all right. Okay, this is important, guys. You listening? Listening? So we know Parker can claim this, but how much medical expense can he claim? Now remember, don't get confused. List the medical expenses that can be claimed, right? You can claim all of them, okay? But just remember, if you look on when you're claiming medical expenses, Parker's going to claim them. Well, no, yes, but in this case, it doesn't matter. It's for the year. There's nothing to add. We're not choosing a 12-month period. It's not. We're not. There's no different dates in this example. There you go. Exactly. So you see here, when you're calculating, remember this. Under 18 years age. So when Parker claims the amount in here, he's not going to claim all of the medical. Right? Okay? Yes. Now, technically, Terry, Ash would claim that. Was it two? Was it? How much was Ash? Ash was. Ash was what? 2,100, right? But Ash had no income, so he's not going to go on his return. There's nothing for him to claim. He's got no income, so he doesn't have enough taxable income to offset it, right? He's got the scholarship, and that's it, right? Yeah, he didn't work, so do you guys remember that? Okay, it's this is all claimable, but depending who's claiming it, you don't claim all of it. Okay, I don't want to. I'm not going to give you the number, but I hope that gave you a hint. All right, did I give you a hint on what the because if you add all these up, you're going to get that when the question asks you how much does Parker claim for medical, and this will mess up also your. Well, I mean, I don't think it's going to ask you for the final. They never ask you what the final amount is, but you know, it's your numbers are going to be different when you count. If you know, okay. Where are we here? Did Parker? Where are we here? Did Parker? Okay, we're not doing it. Did Parker over contribute his RSP? Did Parker over contribute? Well, we just look, yes or no. That's right. So his limit was what? His limit was 55,000. He contributed 4,000 into his own account. That's fine, and 5,000 to a spousal. So it said, did either one of them over contribute? Well, remember, he put 5,000 to a spousal, but Morgan is only 2,500. But what's the yeah, because that's right. It's based on his limit. So if she was over, it would have been over contributing if she contributed herself 5,000 into her own account. You guys, so you remember that? Very good, Genevieve. I'm glad you remember that. So that's straight the answer right there. So the answer is so the answer is so neither of them, neither Parker or Morgan over contribute to their RSPs, and just if you want RSPs, because Parker contributed and it's based on Parker's 100 room limit, not Morgan's. Refundable credits, they're entitled to. I don't even think that's part of the. I don't think I would. You have to worry about that. Okay. Let me see what else is there. Hold on here. Sorry, just bear with me here. I'm trying to. Okay. Let's see, what else is there, guys? Okay, what else is there? Let's see. Okay, so we already answered this question. I guarantee you this will be a question. So how much of the scholarship received must Ash include in their taxable income? Remember, it's 0, right? Okay. How much of the expenses for books and association fees can Ash claim? 0. Remember? Okay. Parker has the higher income. Can Parker claim? Okay, so remember this question here? I didn't want to. Well, okay. Can Parker claim childcare expenses for the babysitting? Yes or no? Why? Because? That's right. Remember, you had to be at least 2 weeks in a hospital or longer to be able to claim some of the child care expenses from the spouse. So usually it's the one who incurs the lower income incurs it, but in this case, because remember the supporting it can be for the other spouse. So Parker. So you know right away. Where is it? Where's that question? So Parker can claim. Parker can claim a portion. So I'll leave it at that. Okay, of the child care expenses. That gives you a clue right there. What else is there? So he can claim a portion because remember, for 6 weeks. So, but there is a portion she can claim. Let me see here. Let me read this. Market had. So remember when you had to calculate childcare expenses? Remember how you have to do that? It's on what's the form again? Or what's the thing? The worksheet, right? Is it the worksheet? The T778, that's right. Okay. So on the T778, okay. Which is on line 21,400 when you're claiming childcare expenses. So we know Parker can claim. All right. But not the full amount. Okay, guys? So when I wrote down a portion, that means he out of that 2,500. So when you do the T778, hint, hint, you got to do it for both of them. Okay? He can claim a portion. Morgan can claim a portion. We already answered this through the thing. Who would claim the medical expenses? Remember? Who was going to claim the medical? In this case, it would be Parker, not Peter. Who keeps saying Parker? Peter Parker. Yes, that's right. Parker. Did they over-contribute to the RSPs? Neither of them did? Okay, so Okay. Now, does everybody know what a Form T2205 is? Do you remember what a Form T2205 is? Remember, it's to do with overcontribution, right? To determine, okay, so that's right. So since they didn't overcontribute, is a T2205 required for them to fill out? Okay, I hope you guys are remembering these preparations we're going through. Because what if you record me and then you use it against me and say, Nikos, give us the answers? So I'm just giving you some hints here, guys. All right, it's okay. Because if these numbers come up in your head, come up on an assignment, and the word T2205 or overcontribute or who claims, you're like, yes, Nikos told me. Nikos told me. You make sure you remember what I told you or what we discussed. You'll make sure you calculate. You're going to obviously do calculate for CPP overpayment if there's any or not when you do the Schedule 8. Is there any EI overpayment? Okay, so just doing like a regular tax return. You will need to do 3 returns, okay? One for Ash, for the child, one for Morgan, and one for Parker, okay? You'll have to do the Schedule 11 for Ash, so that'll help as well. So, and that's pretty straightforward. Just again look at the T2202 and just answer the corresponding parts of it. All right. What else is there? I hope I'm giving you quite a bit of helpful tips here. Tips, that's a better word. So remember on the Schedule 11 how much he's going to transfer to his parents. So what is the max amount he would be transferring? It'll be on your lines. It'll be on your Schedule 11, but you kind of know already what's the max amount. What is it going to be? 3,000. No, Terry, it's not going to be like that. It's going to be, remember, it's going to be 3,000.00. Remember? To 2 decimal places and a comma. All right. What else is there? So yeah, there'll be some answers. You'll need to be based on the Schedule 11 for Ash, as well. Remember, I asked you, does Ash qualify to get GST? We answered that. So, does Ash qualify to get GST? Yeah. So basically, some of these answers are going to be as questions. So, because I think there's also multiple choice as well, and not just fill in the blank, or not just like putting the number in, but I think there's more there's a good amount of multiple choice. Isn't it? Maybe it's mostly multiple choice. I don't know. There's you had to enter the amounts. I think the first assignment only had like one multiple choice, but I think this one has more than one. I think it has quite a few. Okay. What time is it? Okay. Quarter after, not too bad. Guys, that's without giving you all the answers, and I hope I've guided you in the right way. So everything we kind of went over, and I kind of repeated over those please remember those hints. 3 returns. You would have to 3 fillables, one for Ash, so you could do the Schedule 3 or Schedule 11. I mean, I don't even know if you need to do a full return for Ash because you're just doing the Schedule 11 anyways. But whatever. One for Morgan and one for Parker to determine what some of the line number items. And I think that's about it. Any questions, guys? I think you have everything, the information. I think we went over this problem pretty carefully. We highlighted the main numbers. We know what to claim, what not to claim. The medical one was tricky. So I think that one might have thrown you off for a loop because you might have put the whole thing. So I think that's about it. I think this one might be easier than the first assignment. I don't know. Maybe I don't know. I think you guys will be doing well. No, you think this one's harder, Genevieve? Schedule 11 is not hard. I mean, it's just pretty much for me. Well, okay. Remember, I'm in the office on Friday, so if any of you need to call me or want me to call you, send me an email, and I can make time to call you. I'm in the office from 2 to 6, barring any clients I have. I don't know if I have any clients scheduled this Friday, but if there's